Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Qs, which is basically the exchange traded fund for the Nasdaq market. And as I do each and every week, I've left my lines on the chart so you can see how the forecast worked out. Now last week I said we would most likely pull back in an attempt to fill this gap right here. Let me zoom in so you can see that. That gap is still open, but we did make an attempt to fill that on Monday, and then I said we would most likely bounce after filling that gap. Now what's happened here is the forecast is accurate, but I still think we have a little bit more room to go on the downside to completely fill that gap. There's a couple of other things that are going on. If you look down, this is the MACD histogram. I don't talk about that one too much, but I just got finished doing a presentation that highlighted the histogram, and this is showing an overbought condition with a possible downturn right here. So the price action today on Friday the 9th, as I record this, is showing a strong red candle on higher volume. So that tells us the sellers are still motivated. I'm going to erase these lines so that I can draw the new lines for next week, and they're going to look just like this. Again, this gap fill point is going to act as a support level. 80% of the time gaps fill, and then 80% of the time after they fill, the gap will generally act as support and the price reverses. So I think next week we're going to see a little bit of a downturn like that and possibly bounce after the gap is filled. So I'm going to leave that just like that. Now if we look at the spiders, we had a similar pattern. The market pulled back on Monday, but it didn't quite fill the gap all the way. I did say that we would bounce. We did just that. On Wednesday, we gapped up on lower volume here the day after. What does that mean? Well, this market pulled back today to fill or almost fill that gap completely. So I'm going to erase all lines with this and redraw so you can see what I'm expecting for next week. This gap is still open. That's going to act as support. And we have a slight open gap here, which will most likely act as a price magnet. So I think the spiders will pull back just like that. And I'm going to leave it just like that. We'll have to wait and see whether or not it bounces off of this newly established gap fill support level. Now I'm going to hop from the S&P to the VIX because they're inversely related. And if you look at the VIX, I said that we would pull back and most likely bounce. This is the support level that I mentioned for the VIX last week. We did hit that, and the VIX has gapped down. Now, as I erase these lines, let me talk a little bit about the VIX, and I've said this before. The VIX is not a stock. It doesn't trend. It oscillates. Therefore, if you go back in time and look at all of the other occasions where we had an open gap, the VIX fills its gaps close to 100% of the time. 99.9% of the time, gaps fill. There are two open gaps right here and right here on the VIX. I believe that the VIX is going to go up to fill that, at least that first gap, and then we're going to have to see whether or not it continues higher to fill this gap. This is going to be my resistance target area. That might take 2 weeks to get up to that level, but remember, when the VIX is bullish, and in this case it looks more bullish than bearish, that is bearish for the S&P. Now going to the MACD histogram on the VIX, it's showing oversold condition, and it's starting to move back to the zero mean line right there. So that could very well be adding some support on the buy side for the VIX, which again is bearish for the S&P. So I'm going to leave that in place. If we look at a more broad-based index, and that's the Russell 2000, you'll see that we reached my target. We pulled back to the support level right here. Didn't pull back as far, but it pulled back to support. I do believe that next week the Russell 2000 is going to break down below that support level. So keep that in mind. I'm going to draw this line right here, I'm going to erase this first, and then I'm going to draw my forecast. I think we're going to continue lower like we expected last week on the Russell 2000, and then we'll have to see whether or not we get any kind of support at this level. The MACD histogram for the Russell 2000 is looking a little overbought, and it's starting to curve over. That is telling us that it's starting to get more bearish. So again, that supports my idea for a pullback in the Russell 2000. I do believe that this support level will hold. Now let me just expand on this just a little bit. We are past October. There's still some volatility, but I believe that the economy is strong enough to support a good year-end rally. We call that the Santa Claus rally. This is a cycle that I talked about earlier this week on one of the webinars that I did for our Canadian followers. And so the year-end rally, the Santa Claus rally, is something that I'm expecting to see end the year with a good solid uptick. But before that happens, I think we're going to pull back a little bit. Therefore, this support level, in my estimation, is going to hold. We will most likely see a higher support level than we saw back here, and that will most likely attract new buyers towards the end of the year. So that's what we're looking at there. Finally, if we look at the diamonds, DIA, same scenario really. We have gaps below the market. We're expecting a pullback and a bounce. We got the bounce and we got the pullback more or less on Monday. But let me erase these lines and redraw what I think is going to happen for the diamonds. Again, you see this pivot point forming. We have the histogram showing overbought. We see gaps below the market. I think the Dow is going to pull back just here, possibly all the way down to this gap fill support level, and then maybe we'll get a bounce there as well. If you'd like to learn more about the Market Guys, just go to themarketguys.com. Now, my forecasts week after week are extremely accurate. So imagine how accurate my individual stock recommendations are going to be. I put out a trade alert service for our followers, and they are all very happy. We're making money this week, especially in the options markets. And if you would like to learn more about that as well, just go to the Market Guys, look in our store, and you'll see the option oracle and the equity oracle. I encourage you at least look at that and even try it out for a month or two, and I assure you, you'll not be disappointed. So that's it for this week. Have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.